Final thing for this week's five things. This is a fun one, actually. Well, not that fun, but fun just based on the nature of the story. Thing number five: local business insights on inflation.
All right. So this comes from our other DKI intern, Andrew Brown from the University of Tennessee. Andrew also is doing a fantastic job. Andrew's parents own a furniture store. And, we've been talking a lot about disinflation versus deflation versus price levels. So let's just take a quick moment to define all this, right? Inflation means increasing prices. Disinflation means prices are going up, but at a slower rate. Maybe your inflation rate goes from 10% to 5%. Prices are still up, but it's disinflation. They're going up at a slower rate. Stable prices means your prices are basically flat from where you were a year ago or a month ago. And deflation means lower prices. So one of the big problems we've had is economists here in the US are saying this is fantastic. We have disinflation. Our CPI came down from about 9% to 3%. That's 6% disinflation. That's terrific. The problem is that prices in many cases went up so far and by so much that they reached these price plateaus that are unsustainable for people. And so what Andrew did was he went back through his family's business, their records on sofa sales, which I got to tell you, I thought it was a really clever way to present the problem. It was really creative by Andrew to come up with this. And here's what they had. The average price of a sofa in 2020 in his family store was about, I'm looking at a bar chart here, about $2,200, something like that, which, seems like what you would expect. In 2021, the average sofa price rose by 34%, 34% to right around $3,000. Over the next 2 years, the average increase in prices went up 1.6% and 0.75%. So you have all these economists saying, hey, this is phenomenal. Your sofa inflation is only 1.6%. Your sofa inflation is only 0.75%. Look, things aren't getting more expensive. Okay, well, technically true, but like Mark was talking about buying a car, people don't buy sofas every month. You buy them periodically. And if you move and you need to buy new furniture or you have a problem with yours or it's just time to replace it, all of a sudden your price level went from about $2,200 to about $3,000. This is what we talk about. This is what we mean when we talk about price levels, right? So what Andrew's saying is we haven't had a lot of price inflation in the last 2 years, but the price levels are such that it's unattainable for a lot of people. And I thought it was a great way to demonstrate with a practical example of something that everybody has bought at some point in their life, or almost everybody, to show the difference between inflation, which can come down, but high price levels where things are still unaffordable for people. Mark, I know you've done a ton of work in the small business space. What are your views on this? Is Andrew looking at this the right way?
Absolutely. And it's funny because when you look at the ability to raise that, because you might be saying it's like, well, if Raymore and Flanagan is charging 2,700 for a couch, I'm going somewhere else. And then you go somewhere else and it's like, oh, they're 2,900. And then you look somewhere else and you're like, oh, well, they're 3,100. You're like, oh my God, the market's reset. And that's when you start looking at the NFIB, or looks at small businesses on a broad scale. And one of the interesting things, to your point before, about looking at small businesses, things happened in uniform. So when you look at post-COVID, you had 75% of small businesses raising prices. So, but then obviously post-COVID, things start to normalize. That starts to come back down. We hit a low in the end of 2023 where only 20% of small businesses say they were increasing prices. So in your head, you're like, this is great. Things are getting better. But now it's 27% are saying that they're increasing prices. So when you start looking at this, all of a sudden we've hit that floor and things are starting to bounce back up. And there's a lot of reasons why. Freight prices. When you look at freight costs, what does it cost me to go from point A to point B? And if you go back since 2010, this is the largest price, taking away the COVID spike. I know COVID happened. The COVID spike, this is the most expensive it has been to move freight in the last 20 years. Then you look at compensation plans, back to your point on labor. When you look at labor, this is the compensation, the plan compensation in June was the largest increase since last November. So now you have a situation where small businesses still need to increase compensation. So they're going to increase that, and they're going to try to push through that price as much as possible, which is why when, pulling everything together, you look at PPI, final demand, that final product is going to be more expensive. It's until the consumer says, I refuse to pay that, that you start to see that flatlining and that decline. Because if all of a sudden couches are amassing in inventory, they're going to have to look at that and say, okay, well, I can't charge 3,000. What if I charge 2,700? But that inventory costs something. So who's going to lose that margin? And then it's going to be the furniture company. And that furniture company is going to push back to the supplier and say, hey, I paid X. I now have to pay Y because I'm getting hit at the front end. That's when you start to see a meaningful hit. We just haven't seen it yet. So when everyone keeps saying, oh, cut rates, it's like, guys, where do you see the reason to cut rates? There's liquidity, pockets of liquidity everywhere. And now you're seeing these compensation plans. You're starting to see these prices going up. It has to really have a meaningful slowdown before you can see those rate cuts.
Gary, one thing that Andrew pointed out too, and Mark, those are all great points that you just brought up there, was also the disparity between, I think what they talked about, like high price sofas, right, versus their discount outlet, let's call it sofas, and the numbers there just in terms of, I think it was overall sales in those two segments.
Yeah, they have a high end version and a low end version. So basically, it's interesting. We've been talking for months here about a bifurcated economy, and I've been having, polite, respectful disagreements with economists and market strategists who are saying, no, the economy's in great shape. The aggregate numbers are fine. And, I've been saying the aggregate numbers are fine, but you have government spending pushing out the private market, and a lot of people are really not doing well. And so, what Andrew's parents have done, which I think is really smart, is they've got multiple lines, and they have a high end line for people who are doing well, and they do have a discount line where those sales are down 16% year to date. The higher price section has seen an 11% increase year to date. And so, that's basically what this one furniture store is telling you, is the same thing we've been saying for months. You have a limited number of people who are doing really well and a large number of people who are struggling.
And that's
Mark, anything else to close us out? Go ahead, Mark.
Sure. So then that's the another key thing when you look at CPI, it's replacements. At what point can you no longer replace? So one of the things that we always look at is, especially when you look at Target, when you look at some of these pieces. So obviously at the top, you have your Nordstroms, you have your Lord and Taylor. Then at the next level, you have your Macy's. Then at the level below that, you have Target. Then below that, you have, let's call it Walmart. Where do you go below there? Like, at what point do you see? So when all of these prices are going up, it's because everything's going up. Even the discounted ones are going higher. But once you get to a point, then everyone starts getting pickier. They're like, okay, well, I'm going to come down in brand. I'm going to come down in quality. I'm going to come down, or I'm going to offset with maybe buying, more, going to the Costco's and Sam's Club of the world. So when you look at these pivots at some point, there's no replacement. So now you're either not buying a 3-person couch, or you're buying instead of buying a sectional, it's only a 3-person. Then it's a love seat. Then it's a lounge. And you see this consolidation, and that's how the buying apparatuses have changed. So when you start looking at, different investments, when you look at multiplier effects and rates, people have the wrong hurdle rate. So if I'm a small business, if I am a business that is looking at this saying, hey, there's an opportunity here, I'm going to go borrow money, I'm going to go invest, and I'm going to hire people. Well, as inventory builds up, and if all of a sudden the market starts to change, you're like, well, I'm not going to build something at the higher end, I'm going to build something at the lower end. And then as the lower end starts to build up inventories, well, then those investment plans are going to change. because I'm not going to get my yield. I'm not going to make the money that I expect because those inventories. So not only are changes happening in terms of where money is going now, but it's also where's my investment money going to go? Where's my expansion going to go? And that's where you start to see those things catch up. But as we've been seeing, as we've said before, it takes time to see people rationalize their spending and slow down some of their CapEx plans, slow down some of that expansion. And that's where we continue to see some of these different hits and some of these different pockets really start to show some of those cracks that have not really hit the economy in the bigger numbers, but in the small business in these other areas. And those are things that are going to essentially accumulate over time, which is what we see really starting to hit more Q1 of next year.
Hey, Rob, we should call this segment Mark Rosano's story of how he got an ottoman.
Yeah, from the sectional to 3-seater
Yeah.
to ottoman.
Right.
Exactly.
He's got a stool.
Yeah.
Yeah.
And must be fair. I found it. It was during the garbage day, and I saw it across the street. I said, "Hey, I think I could reupholster that."
Yeah, not bad idea. I saw one on the street the other day too. And then actually the guys right next door are called the leather doctors. So hey, if you need it, ship it my way, we'll get it done and ship it back. That'll probably cost you just as much too. But I didn't think you guys were gonna make me say it, but thing number 5 makes me say higher for longer once again.
Oh,
So
no.